Good evening. All right, I was just telling Jim that I felt good. My leg didn't hurt right up until about 2 minutes ago. And then it started to ache again. Um, so what we'll try to do is, all right, so the latest prognosis, I went to a new doctor this afternoon, and he said it probably isn't so much, darn, I keep thinking, whatever the word was, so sciatica, um, but it is probably this, what is it called, the solaris muscle, which is the big muscle that goes down your thigh. And yeah, sciatic nerve. So it's probably the solaris muscle, which is getting stiffened up, which is putting pressure in. It is painful. Um, the thing that amazes me is I'm sure we'll have had this stuff for years if they haven't come up with a solution for it. So with that, let's spend another 5 minutes of sitting here listening to me complain. Oh, yeah, we'll go. All right, so as we saw today, the Dow backed off, but we can see the nature of the backing off. It was very, again, indecisive, a doji-type day with the Dow closing above the T-line. The more compelling selling index was the NASDAQ. Kind of did a bearish trend kicker, and right now it came back up above the 50. So it'll be important to see how they open it tomorrow. If they open it lower, telling us this support level is not acting as support, we're probably still heading down. Let's make this a little bit smaller. Possibly all the way back into this area. If they open up positive and do a bullish harami, pretty much telling us the 50 and this area is still acting as support. Piriformis muscle. All right. I guess I'm just going to have to go back to drinking heavily. All right, and then whether we're in a sell-off or just a pullback, meaning consolidation, we saw the transportation index trading positive by the end of the day. So if you analyze all the indexes, you kind of figure out that there's no consensus as far as the selling. It's either indecisive or the other index trading positive. Then basically what we've got is a market where they're not selling it off. They're just kind of shifting from sector to sector. Crude oil bounced today. Notice the T-line crunch. Pushed it right up through this level. And then this is where we have a head start if you're trading an entity that has a T-line crunch and they start coming through the 50. It allows us as a trader to get in quickly because what's everybody else watching? Watching to see whether they can get through the 200. Once they push through it, which we can see immediately because of the T-line crunch, and the confirmation of the T-line crunch is fairly obvious. Notice how the T-line acted as support on so many days as it was crunching up through this level. So once it goes through, even if you're indecisive here and you're buying right here, you've got the benefit of knowing the T-line crunch is pushing it through, and then you also have the benefit of knowing that if everybody else can see that it didn't resist at the 50, they're going to pop it. So that's been making a lot of the oil stocks like Whiting moving up nicely. biggies like Schlumberger coming out of this slow curve type pattern. So what I'm showing this for is if we can see what the underlying trading entity is doing for an industry, then you have a much higher probability to analyze the stocks in that industry. Same scenario on gold. Gold, as we saw, had a little inverted hammer harami on Friday, traded positive today. Observe the obvious. Wave 1, wave 2, and right smack dab on the 50-day moving average, a buy signal confirmed with stochastics in the oversold area. That just tells you the probabilities are pretty strong. They're going to start taking it back up. That's on gold. So that kind of makes looking at some of the gold stocks more viable, like AG or CG. No, that's not one. Boy, it's been a while that I've bought the golds and the silvers. AGI, Alamo Gold, left-right combo after an inverted hammer in the oversold area. Very high probability trade if it comes up. Doesn't gold mean market's down? Z, they can both be bullish. The market and the gold may be influenced by something going on somewhere, like more problems with North Korea. That if there's that doubt out there, that money is going to a safe haven, like gold and like the U.S. stock market. Okay, let's see what else we were working on. Oh, we're long wheat. You can see once it came up through, we started buying. Hasn't been real active to the upside, but it's a nice steady uptrend. Again, as long as it stays above the T-line. Lean hogs. Covered here, reshorted here. Don't have quite a buy signal today. Maybe a piercing signal. So getting ready to recover our short position if it opens positive, especially if it trades back up above today's high. RB, I don't know how to do that, and I've been trying to figure out how to. I'll try to do that just to make it so we can see the signals or the symbol that much better. Let me write that down. CQG color of top bar. Yeah. Well, you can see it like this, but as soon as you click on the chart, it goes to that red banner. I don't know why that is. Okay, we got a lot of stocks to look at and with ideas of what to do. For example, we were short PRRA, but it did a bullish engulfing, not quite in the oversold area. So what's the trading strategy? If it opens positive, you close it out. More than likely, they could be bouncing it back up to the T-line. If they open it lower, don't let it come back up above today's high. That would tell you the buyers are still there. So if you're short, doesn't matter right now how PRAA looks on the 10-minute, because as soon as the day ends, that investor sentiment on the 10-minute chart means absolutely nothing with what the investor sentiment might be tomorrow morning. If we wake up tomorrow morning and the pre-market futures are showing that the Dow is going to open down another 60 points, that has nothing to do with what the 10-minute chart was telling us going into the close today. let's see. So when you see something like this, you see it pop back up, you come out of it, but then you get ready. If it doesn't get back up above the T-line, you get ready to re-short it. So that's what we're going to have to watch for in that tomorrow. Now, when we see a definite sell signal, like we saw in SQM, again, this is observe the obvious. Steady uptrend, started moving away from the T-line, big bearish engulfing signal, and has never recovered. So the perfect place to put a stop was obviously at the open of the previous day. It shouldn't come down through there. After that, you would always have the choice of getting back in. Had, let's say on this day, a Doji Harami open positive, didn't happen. So you could still be out of this and almost to the point where now you could be going short. Now, on a big reversal like this, remember there's a couple elements, and this is kind of what we went through this weekend on identifying the best price moves or reversals. The bigger the signal, the more compelling there's been a change of investor sentiment. So what's the strategy now? How far could this be coming back to? The 200, the 50, or you throw the Fibonacci numbers on. Not because we're using the Fibonacci numbers to see where it could retrace to. We're using the Fibonacci numbers knowing this is where other people are watching to see where it comes to. So if tomorrow it does a little hammer type signal that just bounces off the 38% retracement, that tells us to start looking for a J hook. If it goes down through here and closes here, look for this target or this target or this target. So we're not looking to see where it might reverse. We're looking at where it might reverse and what type of signals do we see at those levels. Let me see what else we got here. We're still short SPWR. This is one of your best signals. Obviously, your bearish best friend signal never has gotten back up above the T-line. If you close out on something like this, you can always get back in when it confirms that it's not going through the T-line and they start selling it off again. Another situation right here. Looks like it could be reversing, except for the fact that today, instead of opening positive and coming up to the T-line, they started selling it off again. So you're still trading below the T-line. EAMS, another one that we knew what was happening coming out of the Bobble pattern. This is what we're expecting coming out the other side. Now, why is the Bobble pattern so, let's say, consistently powerful or consistently profitable? Because if we see the Bobble, which is also a J hook, comes right back up and closes at the 50 a second time. If it goes through, what's it telling all the people that are just watching what happens out of 50? So it's not acting as resistance, and we can see what type of pattern we're setting up to get there. So instead of waiting for it to confirm to get in up here or here, you can get in right here on a positive open. So this is what we're expecting out of a Bobble pattern. In this case, kind of your classic fry pan bottom J-hook pattern. Now we're up here. So what happens when we get up here? Well, our other trend analysis tools start kicking in, such as see a big doji shooting star. If it opens lower tomorrow, probably a good probability that you want to start taking profits. So anytime you see that Bobble pattern setting up, for example, we see that in CHS. If it opens positive tomorrow, what's it telling us? That the 50 is not acting as resistance. You can be buying immediately, knowing that our next move is going to be positive. Where's the first likely target? There's a little gap right there. Remember, here's your best friend gap to the downside. The old adage that gaps always get filled. Well, they may not get filled for 2 weeks, 2 months, or 2 years. But right now, it looks like that's where the next target should be. You could call it, it doesn't necessarily mean that this one, SKT, is a bobble, but it's definitely a J-hook type pattern. Same analysis, though. If this comes up through the 50, what do you have? You've got basically a big fry pan bottom, J-hook pattern, your cup and handle. Yes, you could be buying this one on positive trading. So the pattern is still the same, other than, all right, it didn't quite hit the resistance level. What we're looking for is the fact that we're still identifying a bobble pattern. The bobble just has a little bit more credence to it when it does hit a resistance level and then backs off. So that was why we were recommending QEP last week, because notice what happened when it did break out, kind of a little doji sandwich breakout. So what's our expected results? We can see the bigger pattern is a fry pan bottom. There should be more upside. Halliburton did the same thing. Kind of your bobble pattern, J-hook breakout. Once it breaks out, what becomes our analysis? Waiting to see if there's a reversal signal, and in this case, we're up in the overbought area. It did a gap up doji shooting star. So if you're long Halliburton, what's your next strategy? If it opens lower and starts trading lower, you take your profits, because more than likely they're taking profits and coming back to the test the T line. Let's see, had a nice bobble, yes, on ATEM. This one should be exited if it opens lower tomorrow. It needs to stay above the 50 and the T line. So the only way you want to stay in this one is to see it open positive and trade positive, because you do have that bobble pattern. But now your bobble patterns are going to be predicated on what should we expect coming out of this pattern. More upside. The fact that they could close it or take it back down below this level tells us our bobble didn't work. Remember, the warning right here was if this was the day telling us the bulls are taking control again, and they were able to close this more than halfway down this candle, that wasn't good. The only saving grace is it closed right on the 50. So it gives you a very clear trading strategy of what to do next. Again, it has to open positive and trade positive. We don't want to get stuck on too many bobbles here. Did I do that right? No. E-R-E-O. Yeah, that's a little bit of a bobble pattern also. Worst case scenario, you call it a J-hook pattern, but it's a bobble pattern. You stay long on this one. This is just a very high probability visual trade setup. So what we're trying to do based upon candlestick analysis is find those high probability trade setups that are going to create strong price moves. All right, what else we got here? AVA. The fact that it came right back to the T-line, inverted hammer doji, bullish confirmation. What's the strategy at this point? You just stay long until you see a sell signal. ARWR is a little one that we've been following. Kind of the same scenario in the sense that you've had a nice uptrend, big sell-off day. They brought it back up above the T-line, and now it's trading, again, where the Japanese race traders say, let the market tell you what the market's doing. This had stayed up above the T-line in an uptrend. Pulled back, profit taking, came back up above the T-line. More than likely, it's going to continue up above the T-line or up in an uptrend as long as it stays above the T-line. Oops, hang on for 1 second. EAX was getting a little bit iffy. It needed to open positive and trade positive to stay in it, which it did. Still want to see this break out to the upside. If you're long and you see this open lower and trade lower, what's it tell us about our trajectory? Still sideways. That's when I would close it out. Oops. Mic back in place. I don't know if it's from too much sitting or not. Boy. Hold on, I'm seeing whether this ache is going to go away. Here's our CRC. And let me, no, I don't keep my wallet back there. Yeah, let's do this. Hold on give me 1 minute. Let me do one more stretch here. We'll keep going here for a little bit. I think that stretch helped out a little bit. So anyways, we can see where, in the case of CRC, the absolute buy signal, or let's say a strong buy signal, right here on the 50 and the T-line, the Morningstar signal, now puts us back into the same analysis. Yeah, Carl, yeah, I'll keep going. If I get real bad, I'll call it a night, but I think I can go on for a little bit here. So, again, Doji up here in the overbought area. Where's your safety stop? Just below the low of today. Silica. Again, the Bobble breakout. You stay long on this one. Now, MGYN, I bought some of this, and it's just not been exciting. Just hasn't been unexciting. It's still moving in the right direction as long as it stays above the T-line. And we recommended PBF, again, because of the Morningstar signal J-hook pattern, another one where you can just stay long with the anticipation that if this is wave 1, wave 3 should take us up well into the, let's say, the $32 area. I think we did QEP earlier. Yes, that's a nice fry pan bottom, little Bobble breakout, and the fry pan bottom is still in progress. Hold on to your individual ones here for a little bit. When I tell Jim to do the double line, which may be a while because we got a ton of stocks to look at, tonight we're going to just kind of limit it to one. Okay, yeah, sorry, T. We'll just do, let everybody do one tonight. I'll try to get through most of the ones that we've been watching. So here's Buff, recommended Buff. There was a Friday. There's your wave 2 fry pan bottom, breakout into wave 3. Again, if this was a 5-point move. That should take you up into the over the $31 area. ERII, another one that had a bobble breakout, got a little lethargic, then had a big bullish engulfing. But here's where the importance of knowing what should happen after each signal. There's our doji. Remember, I guess the most often used simple candlestick rule is our doji rule. That's going to move in the direction of how they open it after a doji. So if they open this one lower tomorrow, what's it telling us? That this area is acting as resistance. If it opens positive, what's it telling us? So we got the possibility of a doji sandwich breakout to the upside. Feng, that shooting star was a little bit of a warning. Doji, bearish engulfing. So now we're right smack dab on the T-line. Again, makes it very simple. If they open it positive tomorrow, you got a J-hook pattern setting up. All right, I don't know if anybody's got the Dallas game on. I guess with all this political rhetoric going on about kneeling at the Star Spangled Banner. I guess the owner of the Dallas Cowboys said anybody kneels is going to be fired. We'll have to see how all that works out. Is this just a pullback? It could be. We won't know until how they open it after tomorrow, or in tomorrow's open. And that's MT. That's the advantage we have for identifying what a price is going to move. I don't know whether I would short it necessarily. I just would be out of the trade. So it gives us a much more clear avenue of what to do. Again, based on a positive open, we know the J-hook is occurring. If it opens lower, you probably want to come out of it and wait for the next buy signal. All right, the biggies like Amazon. This is why using the signals give you a good idea of what's happening. Notice the dark cloud gap down put Amazon in a downtrend until our left-right combo and a close above the T-line put us up in an uptrend. Came up here in the overbought area, did a bearish Harami, and closed back below the T-line, puts us in a downtrend. Either this is the support level, but it looks like there's still some more downside. Next target should be the 200-day moving average. The other biggies like Apple. Once again, once it came back down through the T-line, notice what they couldn't do. They could never get it back up above the T-line. We're starting to see doji-type days here in the oversold area, making the possibility of this area right here that was support before being support again. So if you were short, what's the strategy here? It shouldn't trade back up above today's high. If it does, you close out your short position. Nugget telling us that the gold stocks are probably coming back into vogue. Kind of a morning star type signal, a close above the T-line right at the 200. If it opens positive, you can start buying this one. Okay. Netflix came right back down to the 50. So that one you have to watch. Obviously, a good place to have stopped out was right about here, or with a sell stop just below today's low. I would have told you at least you're pulling back. and it would have kept you out of a big move like this. So again, that doji gap down today told you there was weakness. It was time to get out. Now we have to see whether the 50 is going to be an obvious support level or not. On Nugget, the way I define a cradle pattern is if there is 3 indecisive trading days, 2 or less, which is 1, I call a morning star signal. 3 or more, I call a cradle pattern. But it's significant. It doesn't matter what you call it. The significance of identifying the pattern is get a big down day, 1, 2, 3, 4, 5, 6 indecisive days, then in a big up day, that becomes your your cradle. Now Labu, still not telling us much of anything about the biotechs. Relatively flat. So you kind of use these indexes or ETFs to give you an idea what's happening in that whole sector. That's why Nugget is telling us we should be looking at the gold stocks right now, because as far as ETF is showing us new buying is coming in. And this is NVIDIA. The gap down after the gap up. Remember, if you're up in the overbought condition and you see a gap up, this was either a breakout or exhaustion. Now, I would have considered this more likely to be a breakout, but when they couldn't get further up and they gapped it down, now it becomes that island reversal. Telling you there's probably force to the downside. Also, you can see where the likely target is. First target is here at the 50. Okay, what did we do those? Let's see, STX was another Bobble breakout potential. Put a buy just above today's high. Today's high was 33.70. Put a buy stop at 33.72. If it comes up through there, we know our Bobble pattern fry pan bottom is working. CNK, same scenario. Comes up through today's high, you got a Bobble breakout. L brands, same scenario. Morning star type signal, bullish confirmation. Be ready to buy this on positive trading. Now, will every one of these move up strong? Not necessarily, but the probabilities that this, because we have identified this as being a pattern that works extremely well, the probabilities are pretty strong that you're going to be heading in the right direction and with a significant amount of strength. Plus, you also have your sell criteria. If this opened positive, where wouldn't you want to see it close? Back below the 50. That would tell us that our Bobble breakout is not working right at this time. Okay, some other good-looking charts right now. CLMT. Where's the next likely target? Draw a line right up through the trend. Could be heading up back up here into about the $10 range. This one I picked out because notice the big belt hold, bullish engulfing of Friday, bullish confirmation. Wave 1, wave 2, going into wave 3. If it gets through here, there's the first target just above the 50-day moving average. So again, we got a visual confirmation and a potential target of where it might go to. Now, Under Armour, inverted hammer, gravestone doji, whatever you want to call it, bullish confirmation. Remember, our inverted hammer has a very, very high probability that it's going to go higher. And what else can we add to our analysis that it's probably going higher? Look where this all occurred, right smack dab on the same level it bottomed out before. So Again, these are high probability trades, or at least you know you're heading in the right direction, and you know where your sell stop is. So if I was buying this on positive trading tomorrow, where's my stop? I wouldn't want to see it close back below the halfway point of the candle that told us the bulls had taken control. HIBB, there's your proverbial T-line crunch. Notice they haven't been able to close it below the T-line. They've closed right on the 50. If it opens positive tomorrow, what do you have the prospects of? Everybody that's watching to see how it's trading at the 50, see that it's broken through. If you buy early, you've got the potential of having a big day because everybody else is starting to pile in. IMGN, same scenario. Hammer, doji, bullish confirmation. Observe the obvious. The 50-day moving average is acting as support. If it opens positive tomorrow, what else do you have? Not only a breakout of the T-line, but kind of a break through this downtrending channel. Somebody might tell Marshall that it, nope, unless everybody else has lost sound. Then again, if everybody else has lost sound, they wouldn't know what I was saying. GPS, next wave. There's your fry pan bottom classic. If this was a 6-point move, look for this now to head up into about the $34, $35 range. Five below. Breakout. You can draw a trend line right through the tops. And it tells you there's a new dynamic in this stock. LB, XLF, XLF. I had this on here for a reason, but I guess it was pretty much to say that we're right here at this resistance level with a doji. Makes it very simple that if they open lower, this is the resistance level. If it opens higher, you've got a little J-hook pattern breakout. Okay. IOVA. Big morning star signal, inverted hammer. If you're a buyer, buy it above these highs. That would tell you the J-hook pattern's in effect. Whiting we looked at as one of the oils acting well right now. I think the last one we did in today's afternoon session was Harley. Notice when it came up through the 50, they couldn't get it back below the 50. A little bullish harami. Now the potential is they've broken through the 50 and acted as support. Got the possibility of going up to the 200-day moving average. Oh, JP, I don't know the answer to that. That's something you'll have to email Abraham at Candlestick Forum and ask him whether there's a way to get it, or Jim, is there a way for them to get that? Another J-hook pattern, MRNS. GLYC, J-hook pattern. Notice what happened when it broke out through this level. How long do you stay in this one? As long as it doesn't close back below the T-line. PLSE, little trend kicker type signal. Notice it opened here and closed here. And then it gapped up today, opened at the open of Friday and went positive. Still has to break through all this junk, but that little trend kicker usually means there's going to be more upside. Tristan, no. Remember, we're trading the pattern. So if you're breaking out into a new high territory based upon a pattern like a J hook or a fry pan bottom, no, the stochastics don't matter, and they usually will be in the overbought area. And that's pretty much where most breakouts are going to occur, when it's already overbought. So here's EXXI, another energy-related stock with kind of a cradle pattern, scoop pattern. You can be buying this one with that very simple entry strategy, that if it opens positive, you stay long. You don't want to see it close back below the halfway point of this candle. Basically have a little doji best friend gap up, kind of a scoop type cradle. Get ready to buy this one on positive trading. ADAP, another left, right, or bullish engulfing. There's your classic fry pan bottom, J-hook pattern setup. Wouldn't be afraid to be buying this one on positive trading tomorrow. And BETR, whenever you have a flat trading range like this and you see the little morning star signal, that acts like that mini scoop pattern. Get ready for a slingshot effect to the upside on this one. HRTG, morning star type signal, right smack dab off the 50. If you're buying this one, get ready. If you're buying it on positive trading, breaking out through this area, you just obviously want to watch to see what happens when it gets to the 200. And ZUM, here's your Bobble. Be ready to buy this one on positive trading tomorrow. And X-ray, same scenario. Bullish engulfing, Bobble breakout. Look for wave 1, wave 2, wave 3. Why would the 200 be the first likely target? Because that'd be filling this gap right here. Positive trading MT is, it opens somewhere even or up. But what we want to do is make sure that if it opens positive and the pre-market futures are showing that the markets are opening lower, you don't have to jump in right away. Just wait and see what it does. On the other hand, if it opens positive and we can see the pre-market futures are trading positive, meaning the Dow's going to open up 60 points, yeah, you're going to go after it much quicker. It doesn't necessarily mean it has to open above the previous close. Another entry strategy is if it opens slightly lower, you wait to see what happens and get ready to buy if it opens lower and starts trading positive again. My question on trend lines at 8:41. Oops, did I skip one? How far back do you go to start drawing a trend? Seems arbitrary at times. Any words? Just anything where you can see there might be a resistance level. Doesn't matter how far back you go. The only reason I have my charts at this magnitude or this amount is I want to see what's happening here with good vision. I don't want to be so small that I've got to squint. If I see there's a resistance level right here, then I might go back and say, all right, what was happening prior to that? In this case, nothing. Sometimes you can see that there's been a downtrend and it finally is breaking the downtrend. Oops, let me grab a little bit of water here. Oops. What were we doing? X-ray. All right. Now, on the short side, when you see the markets are in this kind of iffy stage, you can start looking for things that might be going short, like BZUN. If it opened lower tomorrow, what's it telling us? Probably that the bottom of this trend channel is going to be the next target. And we've been short SPWR. Because of the doji gap down. Let's make this a little bit bigger. There's a doji gap down. Anytime you see that indecisive trading and they gap it, that tells you exactly what's happening after that indecisive trading. And especially when they gap it, it's telling you not only have they made a decision after their indecision, they've made a very strong decision on which way they're going to go. Dean Foods, we recommended short a couple of days ago. You had this slow curve, and when they break a resistance level, notice how they broke the resistance level with a bearish doji sandwich. That implies there's going to be more downside. Run. Notice how run got crunched. Same scenario. Breakdown of a doji sandwich through the 200 after kind of a slow curve, and more importantly that it kind of broke this support level. So what do you do on something like this? Well, if you had shorted here or even shorted here, and it went from 6, I mean, this is the place where that investor sentiment really starts breaking down. But if it's going down, going down, going down, what happens? Everybody just starts getting panicky and selling. What happens down here? Well, as a candlestick investor, you have the benefit of knowing that you're that far away from the T-line and it's got a huge move. You watch your 10-minute chart. As soon as the 10-minute chart looks like it's coming back up through the T-line, you take your profits. Now, notice on Friday it did a potential harami, which told you that if they opened positive and started trading positive, they're probably bouncing back up to the T-line /200. Well, the fact that they took it down, if you'd covered your short down here or even covered your short here or here, you could reshort it knowing that they are still taking it down right there. And the benefit to us is that we can see immediately what's happening based upon the color of that candle. Now, again, every time we see that gap down from a doji, it sells off like we saw in SPTR, what did I just say? SPWR. Kind of the same scenario on TRIP. Doji gap down, right smack dab to the 50. Now what's likely? Well, if they open this lower tomorrow after this doji gap down, telling us the 50 is not acting as support, you can be shorting it. STM, same scenario. Doji gap down. If it opens lower, where do you think your first target is going to be? Down here at the 50-day moving average. So on trades like this, if you're even a day trader, let alone a swing trader, got a high probability of knowing which way it's going to go where you can get a day trade out of it. And or if you're buying the puts, you know that even though the percentage move may only be about 7-8%, it's a high probability trade. Buying puts here, covering right here, you're probably going to make a good percentage profit. PI, where did this fail? Spinning top, failure right at the 50. Oh, I'm scooping up my mouse here. You're in a downtrend. 50 is acting as a resistance. Where's your next likely target? Back down here and or back down as far as this level. What else we got here? There's your bearish doji sandwich. And where did it come from? Shooting star doji, hanging man, bearish confirmation, doji sandwich. Where's your next likely target? Probably the 50, which is also filling this gap. Just a high probability bearish trade. HIMX. Kind of the same scenario, not quite as good, but we know at least it's probably coming back to the 50. See, we did SQM. SQM went from being a good long to now a probable short. LITE, once again, using the evening star signal right smack dab. Notice how it was choppy in here with potential sell signals, but that is your clear sell signal. That's you can easily define that as being an evening star signal, selling off through this support level. Where's your next likely target? Down to the 200-day moving average. And VECO, wave one. And how did this one start? Sell signals, then your bearish left-right combo, being in the right trade at the right time until when? Until you started seeing confirmed buy signals. Now, you wait for it to close above the T-line. Obviously, if you just made a 35% return on your trade and you started seeing buy signals in the oversold area and seeing that it's not selling off, yeah, you close out your short position and go on to something that has a better probability to it. Whoops. And this was VECO, VECO. Series of dojis, close below the T-line. Wave one, wave two, possibility of wave three going much lower. And AMC, observe the obvious. There's your downtrend. There's your failure at the 50. You can probably get ready to short this one with the expectation that your next target would be down here, which would be a good 20% to the downside, and or down in here someplace. So each time we look at a chart, utilizing the resistance levels or support levels and the type of signals or patterns setting up gives us that much higher probability of showing us where it's time to be going long or going short. So with that, are there any general questions on candlesticks? If not, Jim, go ahead and do the double line. And in 4.2 seconds, do the next double line. Eros, get ready to go short on this one. There's your bearish harami. There's your close below the T-line. There's probably your next trade setups or your support is back down at the moving averages. MYOK, left-right combo. You can short this one. Just watch to see if it supports here. If it doesn't, next target is down to the 50. And EFX, Equifax, as long as it stays above the T-line right now, you can stay long if you happen to have gone long. IMMU, another J-hook pattern in progress. That one you can be ready to buy in positive trading tomorrow. AMD, still nothing here. There's just no trend here. I wouldn't be long or short this one. BGFV, that one you can get ready to buy. Wouldn't be in it just yet until you see a confirmed close above the T-line. Era, nothing here either. No trend. Rig, What is the question? A wedge breakout? Oh, no, not really. But it is a J-hook type pattern still maintaining your uptrend. KHC, that's your short that if it opens positive tomorrow with stochastics in the oversold area after today's bullish harami, take your profits, cover your short position. Wouldn't be going long until it closes up above the T line. KERX, whoops. KERX, nothing here of any great excitement. You do have a little bullish signal. You want to see it trade stronger and then get through this downtrending channel. ITSE, there's your Morningstar signal. Kind of on a support level and back up above the T-line. You can get ready to buy this one on positive trading tomorrow, and then just don't let it close back below the T-line. HZNP, kind of your belt hold, yes. I'd be more apt to buy it if it came back up through, let's say, the 1240 area up through the T-line. LXU went through a whole series of dojis. And there's kind of your cradle pattern. Right now, you just stay long, but I would be taking profits on any weak trading tomorrow because more than likely that's telling you they're coming back to see if the 50 is going to be acting as a support level. JB Hunt, all you can do is stay long. I would use today's low as a stop with a bearish harami. And if it comes down through there, it's coming back to test the T-line. You can always see what to do after it pulls back to that level. MTW. After the three white soldiers breakout, you just stay long on this one. A safe stop, I'd still use the T-line as your stop. Because tomorrow the T-line should be back up above this level. You don't want to see it close back below this level because that puts you right back into the trading range. Goodyear, yes, you can go long on this one. Might not get a huge percentage move, but it's going to move in the right direction. And if it breaks out through here, it's going to test the 200. If it gets through the 200, got the possibility of coming back up and filling the gap. Guild. You had a little left-right combo and a doji. If it opens positive tomorrow, you can be buying it with that doji sandwich setup. RGNX, that's your potential bullish flutter kicker. Now, if you're long with the gap up today, I wouldn't want to see it trade back below today's low. That would tell you the profit taking is still in progress. Micron with the close below the T-line today, it has, if you stayed long, it has to open positive and trade positive to stay in it. Now, Micron had a lot of, or better strength, it had a little left-right combo on Friday, but with them closing it back below the T-line, going the opposite direction, I would have probably closed it out. But you could always buy it back on positive trading. ABEO, we closed out a little bit ago. You still watch to see if they can bring it back up above the T-line. NTAP. Kind of a dark cloud. If it opens lower, it's coming back to test the T-line and or the 50. Again, notice how they broke through the 50. Now they're going to come back and test it for support. U.S. Steel. Nothing exciting here. If you were short, though, I would have probably covered the short today. If not, Get ready to cover it on positive trading because it tells you the buying after the gap down. Where do most people sell? They panic sell at the bottom. And notice where they did it, right here at that support level. Southwest, look for the J-hook pattern breakout. And CTSH, nothing wildly exciting on this one. Matter of fact, if it opened lower, you could probably be shorting it with the idea it's coming back down to test the 50. But if I was long, I would have been out of it today. After the doji, right on the T-line, it had to open positive and trade positive to stay in it. In Tiffany's, stay short until you see a confirmed buy signal. CSOD, another one that if you were, I would have been out of this one, knowing after the selling started it was coming back to the T-line. I wouldn't be back in it until you see a bullish signal taking you back up above the T-line. Tractor Supply, there's kind of your little J-hook. If you're buying this one, obviously watch to see what happens here at the 200. Adobe, stay short with your best friend gap down. SYNA, yes, stay short. Nice fry pan bottom in ESV. You just stay long on this one. IMMY, wouldn't be long or short this one. Nothing there. JP Morgan, backed off, again, right here at the resistance level. If it opened lower tomorrow, I'd close it out and just be ready to buy it if it comes back up through the resistance level. And Home Depot, get ready to buy this one on positive trading tomorrow. That's the obvious, which is the J-hook pattern with the morning star signal right off the T-line. Then your doji sandwich, so you had a McMuffin, which implies there's going to be more upside. FILN, oh, Carl, that might be a lap. FINL, you can buy this one on positive trading. Okay, let's call it a night. Everybody, thank you for sitting through. We'll see everybody bright and early in the morning. We'll see you then.